Good morning. This is Robert Kaars Sijpesteijn bringing you this morning's market update. Taking a look at last week's close, US markets were relatively stable, giving away few points to provide a strong positive performance for the week. The US 500 lost 3 points to close on 1,917.58. The US Tech 100 had a positive performance of 4 points to close on 4,163.18, and the Wall Street shed 25 points, closing on 16,396. The positive momentum could be set for a shake-up with Fannie Mae, the state-sponsored US mortgage backer, at risk of needing government bailout, which could knock confidence in the housing finance market, senior officials have warned. Since 2008, Fannie Mae has been in the post-crisis limbo of state-sponsored conservatorship, neither fully nationalized nor private, following several unsuccessful attempts by Congress to overhaul it. Because the government does not let Fannie Mae retain profits, Tim Mayopoulos, its chief executive, told the Financial Times on Friday that its capital buffer, which has dwindled from $30 billion before the crisis to $1.2 billion today, was on track to disappear by January 2018. At that point, it would be unable to weather quarterly losses and would need to draw on Treasury funds to avoid being placed into receivership. So far, investors who own Fannie Mae's mortgage-backed securities have not been spooked by Mr. Mayopoulos, Mr. Mayopoulos said, but he added, "We are a major source of liquidity to the mortgage markets, and it would be better to avoid testing the market as to what the breaking point is well in advance of us getting to that point." Moving to commodities, gold lost steam last week, losing $5 on Friday to close on $1,226.30. The precious metal has benefited from haven demand among investors amid negative central bank interest rates, raising the price 15% this year. While gold-backed exchange traded funds have seen strong inflows so far this year, Asian physical demand has failed to materialize. The floor price for gold has probably risen and the bear is back in hibernation, but it is way too soon to be talking about a new bull market, said Tom Kendall, a precious metals analyst at ICBC Standard Bank in London. While gold is starting to retreat, oil producers are hoping things may swing in the opposite direction. A deal between Saudi Arabia and Russia to freeze oil output failed to stem the biggest drop in bullish bets since July. The agreement reached February 16th isn't going to revive crude prices, according to Goldman Sachs. Iran said it supported the deal without saying whether it would temper its own production. A ban on Iran's oil exports was lifted last month when the Persian Gulf country completed the conditions of a nuclear deal with world powers. Iran is the biggest threat to the oil freeze deal, as the country is just beginning to reopen its wells and will be looking to sell in order to make up for lost years during the sanctions. On Friday, Brent crude dropped a little under $1 off its price, closing at $33.09 a barrel. In Europe, the Germany 30 declined 80 points to close on 9,382.3, and the UK 100 dropped 18 points to close on 5,948. Sterling is on track for its biggest single-session loss since August on Monday, after London Mayor Boris Johnson threw his weight behind the campaign for Britain to exit the European Union. Pressure on the pound intensified in morning trade, leaving it down 1.5% at $1.41, its closest level in 3 weeks. The euro rose 1.2%, leaving it down. The euro rose 1.2% against the pound to 78 cents. Monday's selling left the pound at the worst performing major currency of the day, adding to its weak start of the year. It is down 3% since the start of January, the biggest drop of any major currency during 2016. Senior Tories believe the number of Tory MPs backing Brexit is approaching 150, meaning that the parliamentary party of 331 MPs is split almost in half. However, Mr Cameron has correlated the support of bosses of about half of the country's 100 biggest businesses ahead of the June referendum that will shape the future of the UK. Corporate leaders at companies including Shell, BAE Systems, BT and Rio Tinto are set to sign an open letter arguing that Britain is stronger, safer and better off in a reformed EU. Analysts said the uncertainty that the Brexit debate holds for the country's economic outlook meant the pound is likely to remain under pressure for some time. In today's corporate news, house builder Bovis Homes posted a 20% rise in profits before tax, driven by record volume. Swiss private bank group EFG International said it will buy Brazilian-owned rival BSI for 1.3 billion Swiss francs. In today's economic data in focus, at 9 a.m. market for Eurozone composite PMI, services PMI and manufacturing PMI are released. At 11 a.m. in the UK, CBI Industrials Trend Survey are released. At 1:30 in the US, Chicago Fed National Activity Index is released. And at 2:45 in the US, market manufacturing is released. That's all for today's market update. Thank you and goodbye.